Good afternoon, everyone. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in that chat box. Let me know that you can. I would greatly appreciate it. Morning, Helen, PK. How you doing? Thanks, Alyssa. All right, let me go ahead and start the video. There we go. It works. All right. Okay, welcome everyone. Hope you have been having a great day. Hope it's a good trading day for you. Hitting all-time highs again, so can't be that bad. So as we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. All right. So we got a lot happening this week. We got Trading You coming up tonight. We've got at 7 o'clock this evening, we have Inner Circle check-in. Mastermind is tomorrow on the 13th. We will be doing the second half of our course strategy. Elisa, can you do me a favor and please send Suzanne an email to send it out to everybody in Mastermind? Then we're going to pick up the second part of course strategy tomorrow night. I don't know how long it's going to take. Could be an hour, could be 2, whatever it takes for us to finish that up tomorrow evening. You got E-mini and patterns in a flash coming up this week as well. Power option plays, covered call, E-mini are on a regular schedule. Power hour on Coach's Playbook is on regular schedule as well for this week. Right, here's our follow us page. Make sure you check out the various social platforms we're on out there. There's a lot of them, and we got tons of content going up every single day. We're getting close to 700,000 views on one of our TikTok videos. So we're getting some traction on some of the platforms. All right. Here's Trading Boss Manifesto. This is what it basically means for me, for you to be a trading boss, right? You can download this on all of our sites. The homepage from Wealth Builders, you can download it on robertjroy.com. You can download it on tradinglikeaboss.com, right? And that is, actually, Lisa just dropped that in for y'all. That is a site that you should definitely be checking out regularly. There's a ton of great content up there. All right, look at that handsome gentleman right there in the middle, right? Discover the art of cash flow training, right? Trip is doing his first free class. But all of our resources are listed up here, guys. You can pick all of them up here. They're all free, every one of them. All right, let's put that back. The great freebies, right? There's a lot of content that we're sending out right now, all free stuff that's available. You want to take advantage of it. Just whatever you can do to dig in, to dive in, right? To get better at trading. No different than Trade with Rob, right? That should be a given, right? There's free resource of trades that you get a couple times a week. All right, so look for those. What trades did y'all do today? Drop those in. Let me see what you're doing, what you guys are up to today. I did not get any trades off today. Nothing that prevented me from having good trades. I just did not get to the computer early enough to get any of the trades off, just with some other prior commitments that I had to deal with today. So it seems to be a slow day all around. We got a small group here today. There you go. So Trader Wilson did a scalp on Crocs. Nice. Trip, how'd you guys do on the Hakanashi scalp? Jennifer said, I made 2,300 on SPX last Friday with an Anaconda. Great job, Jennifer. Great job. Really nice. 2,300 bucks. There you go. I love it. I love it. All right. Cool. Okay, so I want to jump in. No worries, Strip. Let's see. I want to go ahead and jump over and look at the S&P 500 and see what's happening there. So we really need to talk of what's transpired, what's taken place. And I want to kind of back up a little further than just today, right? So you got Monday's candle on there, right here, okay? So at 50, 46, 23 right now. So if you go back here, prior to us getting up to that 5,000, we had broken out of this 48.87. We had the 4,900 there, and it's oh so long ago, right? Like 2.5 weeks. We pushed up, closed, the next day flat, we gap down and drop. The day after we pop back up, we get a great bounce off of the 8, the fib line, the 4,900 level. And from there, we get a big push up. We get near that 4,981 level, which is our fib line. And then for the next 2 days, we go flat, all riding along the 5 moving average. We finally get a gap up. And on this day right here, so close, 49.99.89. We missed it by 11 cents, ringing the bell for that 5,000. Right? The next day, we hit a high of 5,040 cents. It's like, all right, we're done now. We got past it. It's all good. We don't have to chase anymore. We don't have to be worried about it. We hit it. Now it's just time to get back to trading. The day after, we get a great move right off of that 5,000 level, and we get a really nice catalyst that puts us up on a close of 50.26. So today we opened up at 50.26.83. We closed at 50.26.61, so 18 cents higher today on the open. We had a little stretch back and a bounce, and we're running into that 50.56.70 level next, right on the upside. If I kind of step this back a little bit, too much. Here, I just want you to see the entire fib. All right, that's the best I can do with it, is right there. Okay. You see the entire fib. I mean, we have done extremely well. Actually, let's go back a little bit further than that. Right? We struggled from July through October, near November there, the end of October, beginning of November, with this downward trend. We finally got out of it in mid-November. Right here, we had a great gap away, and we have just ridden up. This trend line has really no value in what we, how do I want to say this? It was not drawn because of what's going on here. This was drawn because it was parallel and equal distant to this trend line here and here, and then this one here, and we added the next two to see where stopping points were and so forth. And as we broke out, we just rode right up that same diagonal trend line, came back to it, rode up that trend line, gap and go, and we never looked back. That was the rest that we talked about here earlier, right? So overall, it has been a great move to the upside. Where does it go next? 50.57 is the next stopping point. So we don't have a whole lot left, about 10 points to the upside. From there, we've got a 5,100 level and then a 52.19. Of course, there'd be a 5,200 also, but and we may need another fib in there as well. I'm not going to draw it right now though, but the 5,200 I'll put in. Okay. So overall, really nice move, really nice structure. I would not mind seeing us get above this trend line here, right? To break out, get above that 5,100, retest and bounce. And then you got blue skies up to that 5,200 level. So overall, I like the pattern. Are we gonna see it go down at some point, not just continue to go up? We might. So just stair step down to every line. Right now, we've got the 5,000. We've got the 49.81 level, which has a confluence of the 8. We've got the 4,900 confluence of the 21. So could we pull back? Yes. Would it be a good thing to pull back? Yes, it would. We've gone now 1, 2, 3, 4, 5, 6. Today is 7 days that we've been completely away from the 8 moving average. Previous, we were 1, 2, 3, 4, 5, 6, 7, 8. So we have one more day to keep in stride with what happened last run before the pullback and the next stair step up. And that stair step pattern, when you see, let me grab a pen. When you see this move up and a pullback, this move up and a pullback, this move up, we're looking now for our next pullback. Right, we're looking for our next pullback in there. That's a stair step pattern. Is it very steep? I'm not a big fan of ones that look like this. Right, that's just too steep for me. I wouldn't mind if this had a little bit more of an angle than it does right now. But overall, this pattern that we're looking at, that stair step, has been very nice. So we want to see those pullbacks. Those are really healthy things to get those pullbacks into that moving average / confluence of the fib line. Gives us a lot of strength in that zone, in that area, when we see that pullback to there, right? If we look at VIX to see what's happening with fear, oh, wait a second, the market's up. What do we do gapping up today on the VIX? Yeah, guys, we're down so low on VIX. It's just a slight correction. Nothing I wouldn't read anything to it going, ooh, the market's going to crash now because VIX is, nope, don't worry about that. Don't read that into this at all, okay? None whatsoever. All right. So the S&P 500, let's look at the bigger pictures, which means a weekly chart, right? So good fib drawn in there. You can see 1, 2, 3, 4, 5. This is the first day of the week. This candle today, first day of the weekly candle, but there's the last 5 weeks we've been straight up from there. Right, and we're sitting right at that 50-56 level. We got 52.19 is the next upside target. And on the monthly, really, I like the pullback much better on the monthly than I did on the weekly, right? So we got a nice move up. We broke the 41.81 level in there, right? Which we can't really see on the weekly. Well, we can. It's down here. It's been a while. Right, but on the monthly chart, you see same thing. Last 3 months, 4 months, so 3.5. I guess. What do we have today? The 12th, I think. Yeah, February 12th. Right, so we got 12 days in this month, almost half because it's a 20. Well, actually, it's 29-day month. So good strong push up. We're right at that 48.18 level. I'd like to see it pull back and bounce off of there. To the upside, guys, you see another line is brown. 54.73, that is an actual fib line. The 41.81 is a midpoint, right? No, 41.81 is a fib line. Sorry, my bad. It's the other way around. The brown line is a midpoint, right? I believe the 54.73 is a midpoint, okay? So, and it's a great confluence at the 55.33.10 level as well. So lots of opportunities for moving here. Obviously, you're going to want to be cautious with what the S&P is doing right now to make sure that you have a good handle on what the pattern you're looking for, the setup you're looking at for your positions, right? What is it that you like to see in as an entry? So let's do this if we can. You're going to type a number in for me. Buying calls, buying puts only, okay? In other words, I don't want to worry about any spreads or covered calls, naked puts, anything like that. Just a directional buying call and or buying put. How many different setups do you, well, let's say it this way. How many primary setups do you look for on your trade? Because you may have 10 total, but they don't present themselves all the time. You may use one only in a really choppy day or after a really large candle up or down. So how many setups do you have? Is it 5? Is it 20? Is it 1? How many trade setups for trading directional trades? Just type it in the chat box. How many trade setups y'all use for your directional trades? That could be day trade or swing trade. I don't care. Wow, 7. Jeff has 5, which, listen, Jeff, very experienced trader, so, I'm not surprised. I'm looking at a lot of 2s and 3s. We got all kinds of numbers, guys. Go up to 7, go down to 1. Okay, so many of you are trading with, and that was the point I was getting at, are trading with more than one setup, right? Trying to figure out how to ask this without making it a long-term, long time conversation of you having to type in. So one of those patterns is going to be your preferred pattern, right? And it may be preferred today just because of the way the market's going. Maybe you don't have a preferred. You just day trade. You've got 3 different setups, and you're just gonna, based on what the market's doing or your stock is doing, you're gonna trade that one particular pattern, right? For others, there's going to be certain criteria you look for, and you're gonna pull that trigger for that trade setup. And that's kind of me. I don't go in saying, all right, this is what I'm going to use, right? I went to mom's house on Friday to do some work on something, bought a big bucket of tools with me, had absolutely no idea what I was going to use. A door fell off the hinges. It didn't really. She pulled it the wrong way. She was opening it in the wrong direction and ripped the hinges out of the wall. And then proceeded to tell me how small the screws were. Yeah, Mom, they were fine until you pulled the door off the hinges. But I had plenty of tools in my toolbox. Did I have any idea I was going to need to use a wood chisel? Why? The hinges should go right back in place. But there was something was in the way because of the way the wood cracked, and I had to clean it up a little bit. So I took that tool out and I used that tool, right? Yeah, PK, I didn't use wood putty. I used bigger screws. Literally, I drove 2.5-inch screws into the wall. And it's a homemade frame. So I made the frame out of 2x4s. So it's not like, that thing should be breaking. It shouldn't. It was just that she kept bending the door the wrong way. And she couldn't understand why it wouldn't open all the way. But I had my my bucket of tools with me, and I had plenty of different tools in there to choose from. And I pulled out, I probably used 7 or 8 tools while I was at the house, right? Screw gun, I had a drill. I needed a drill bit. I used a countersink to do something on the hinges itself because I had bigger heads on the screws. I need to get them sunk a little deeper, right? The screwdriver, of course. I needed a pliers. We had a hammer. There was a nail in the way somewhere, right? But I took that tool out and I used it. I don't look at every problem as a nail, and my only solution is a hammer. All right. And it should be the same way with your trade. You're going to have a primary system that you like, right? I've got a primary set of tools I would take no matter what I was working on, right? But you're going to have a primary setup that you like better in most cases. Not everybody per se, but in the most cases. Let's see. How many years does she live there? Well, she's lived there since she was 16 years old. It's the house I grew up in. So she's been there a long time. She's in her 80s. So 16, almost 70 years. That's the door has been hung for about 25 years. Because I built the room in the basement for storage. I put the door up. I don't know what got in her head that the door opened out instead of in. I don't know. My fault for not putting stop molding on the door, but there's a piece now. The door can't open out any longer, right? I took care of that just to make sure that we were not going to get in trouble yet again. All right. Yeah, but good house, good bones, that's for sure. Strong house. But point was about the tools, right? That's your trade setups. Your trade setups are your tools. Okay. So you want to make sure you're focused on what your setups are. And that's part of what I want to talk about, or not part of, but the topic I want to talk about today, excuse me, is the best trading pattern of all time. Now, some of you may agree with me, some of you may vehemently disagree with me, and that's okay. I love a good, strong discussion. Excuse me. Never to the point of argue about it because I can care less, right? And bottom line is, what does your brokerage statement look like? That's all it comes down to. Nothing else matters. I don't need to be right. I just need to be rich, right? I don't need to have the most prestigious job in the world. Call me the chief sewer steerer and pay me $1 million a year. I could care less, right? It's not the perception. It's what I'm able to do, right? When I talk best trading pattern of all time, there's a lot of different patterns and a lot of different ways that one could trade. Okay. If we look at it, and let me grab a notepad. Where did it open up? There we go. Okay. The best trading pattern of all time. So first thing we've got to consider, and again, we're looking for, this is only for directional options trading. Now, could you use this for other systems? Absolutely. But I'm just making sure you fully understand that that's what I want to talk about today. All right, is this one type of setup. So we look at a pattern setup. You have two primary, right? You have a breakout. You have a retest pattern, right? Where it will move up, come back and retest and bounce, right? The breakout, you're not waiting for that. You're just taking the trade. Now, I have my preference of the one I like, which of course I will share with you in a sec, but that doesn't mean the other one doesn't work. It's all a matter of how do you build your system, your setup out for your candidates, for your companies that you're trading, and how does your plan, your trading plan, set up to allow you to take advantage of that move. It's not that it's a bad trade setup. It's like looking at a technical indicator. I don't use RSI. Brandon crushes it with RSI. The folks in Inner Circle are killing it with RSI, using it in their Hakanashi trade, killing it, right? I don't use RSI. It doesn't work well for me. You never heard me say it doesn't work. It doesn't work well for me, right? I have other things I like better than RSI. That doesn't mean RSI is not a great indicator. I love the indicator. I just wish I had a better use of it, okay? So no different with breakout and retest, okay? When we look at, so we'll just do Rob's favorite. Retest. I'll draw it on here quickly. I can't leave it there because it's just going to be a pen, right? Here's a line. We broke out. That's a resistance, let's call it. We came back now at support. We retest. You don't have to get all the way back to it, but you get close and you bounce and the entry comes in there. The breakout is taking the trade in there. And you have to analyze how a breakout works for you on your stock if that's the type of trade you want to take. So I will give you an example. If we look at Goldman Sachs, diggity dang. Let's go back to a daily chart. Let's go to Goldman Sachs, okay? Today was a great move on Goldman Sachs, right? Did anybody, one for yes, two for, well, just yes, only yes if you did. Did anybody trade Goldman Sachs today? If you did, just drop a one, and if you didn't, don't worry, okay? So here's the thing. You had a breakout in there, and depending on how you take that breakout, you could have just said, all right, we broke above the 386.20 level. I'm taking the trade. So what would I be trying to analyze pre-market? We're up $2, $3, $5 in pre-market, whatever it was. I would be looking at the daily chart and saying, how did the breakout pattern work historically? Now I go and look. We broke out here. If I took the trade on the breakout, we fell the next day. We broke out here. If I took the breakout intraday, we gapped down here. We broke out here, we failed the same day. We broke out here, the next day we were down. We broke out here, ooh, that hurt, right? We had a little breakout there, probably didn't take the trade, right? Breakout here, fail, breakout, fail, 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 fail. Oh, not yesterday or Friday. Oh, today was a great breakout and moved to the upside. Oh, but I knew today was going to be the day. Really? You knew how, right? And I'm talking about just taking, it broke resistance, jump in. It got above it by X. You may say if it gets above by 50 cents, by $2, whatever your number is. It got to my point where I'm saying this is the entry. I'm going to take the trade. Goldman Sachs has proven time and time again in the last 3 months, 4 months, breakouts do not work well at this level. So I would be very cautious here trying to take a breakout trade. But the question you have to ask yourself is, would a retest have worked? If we broke out and pulled back to the 386.20 and bounced, would that have given us an opportunity to take the entry? Let me see. Les said, so watch for the breakout and buy puts. Well, you're talking about breakout and fail then, Les. I would be hard pressed even buying puts, right? Because look, we broke out here, we moved down, but it really didn't work in our advantage. This was a gap down. Had we bought puts here, it would have been great. So no, I'm not looking for the puts, Les. Instead, I would rather see, and again, I'm not the breakout trader. I would rather see if it broke out today, came back today, and bounced today, right? That's one way. Excuse me, we could wait for a breakout and a close today. Tomorrow we pull back, we retest and bounce, and you take the trade there. Either way works, but you see what we're talking about here? That's three variations right there. You have just a pure breakout, a breakout today that pulled back and retested, a breakout and closed above today, retested tomorrow and bounced. There is no right or wrong. There's no good or bad. There's no, evil and no, there's none of that, right? It's a matter of what fits your own personal comfort zone. Excuse me, tickling my throat. What fits your comfort zone on that setup, on that trade? All right, so now, and guys, write the steps down, okay? So I'm not going to write everything down on here. My favorite is a retest, right? I just gave you three ways of this as a potential entry: the break, the breakout today and retest today, the breakout and close today and retest another day, tomorrow, preferably, okay? Any one of those three is fine. I am very much about day trading these days. I have been for the last couple of years now. So the in and outs are my preference today. So if we get the breakout today, if I can get a retest today and a bounce, and that's critical. That's critical. That's the key. All right. So let's go look at Goldman Sachs. I've already got a line drawn at that 386.20. Right here. Okay. So we broke out. Yes, definitely big spreads, Les. We broke out. Oops, sorry. We broke out of Goldman Sachs. First candle, we moved up. I'm actually going to, these are fives. I'm going to go look at a 1 minute candle. And let me see. I wouldn't mind seeing the whole thing right now. Okay. So we gapped up a little bit. We ran right into resistance, the 386.20, and we failed. Right. Well, now if I go back to the daily chart, going back to the question came before of should we buy puts? Les had asked, right? So Les, look, I would be buying puts if it failed in here, but I don't have anything that says buy puts here. Okay, there you go. PK said the 21 moving average is too close for the put. It still kept us into a bullish bias, bullish neutral bias. So a hard decision of should I buy puts on it or not. But the previous patterns aren't indicating a lot of bearish movement here. It's kind of bouncing off the 21, the green line, back up to the fib, back to the 21, back to the fib, and so on. Okay, so you'd have to make that decision. Is this in a place that you might want to consider a bearish move? First off, best chance of being right in the trade only trade in the direction of the S&P 500. The S&P is going up today. I'm going to look to trade bullish. If it's going down, I'm going to look to trade bearish. This will give you the best chance of being right. Just that alone. So with that in mind, would I even consider the bearish trade? Now, let me back up a second. There are some of you that have been around the block for a long time. You've been trading and doing this stuff for years, and you've got a good handle, and you can take the inverse trade to the market. You can take that opposite direction. The market's going up, you're trading bearish. You know where to take that trade and where the setup is, and how and when to take less contracts and so forth. If you are newer, and how do we want to define newer? You can define for yourself what you think newer is. But if you're trading and you're not at a place that you are having somewhere near the success that you want, you may want to just back away from fighting the opposite direction and go find a different company to trade. What if I can't? Then don't trade today. I found 4 companies for us to look at today. All 4 of them moved and had the same type of setup as far as the move up. The question is, did it move up properly? That's really what it's going to come down to. We're going to go through all 4 examples here today. Let's see. Les said puts as just a quick day trade when it moves back down. Yes, and you can. So again, Les, you can trade it bearish. All I'm saying is 70 to 80% of all stocks move in the direction of the S&P 500. Look at how much you put the odds on your side just by trading with the S&P. That's all. I'm not saying you can't trade an inverse relationship to the market. I do it all the time. I'm doing a little bit longer than others. All right. So, and again, that doesn't mean I'm right all the time. That is certainly not the case. Ask my wife. She will tell you I'm wrong all the time on everything. At least that's the way it seems sometimes. So Helen said, wasn't that a retest on the 1-minute chart? So we're going to talk about that. All right. So actually, I'm going to bring this in bigger and just scroll backwards because I don't want to see it. So we pushed up and we ran into that 386, but I only want to trade this bullish. I made that abundantly clear. I don't want to trade the bearish side. We failed, right? We closed right at it. So on, I don't know if we can do this. Let's see. So on this candle right here, the candle that's far to the right, I'm in position number 3 in the chair, all the way back here. Position number 1 in the chair, all the way back here, right? There's nothing for me to do because I got to break out of this resistance line up here where my mouse is, right? We come one candle forward. I go from position 1 to position 2 in the chair. We're right at resistance now. I like it. The next candle we broke out. I am on the edge of my seat, hands on keyboard. I am ready to pounce. The problem is I never got a retest of that line. We gapped up and we ran, right? So on that candle, that's the breakout. And you have a decision to make. Am I taking the breakout? Because if I didn't take the breakout here, I missed the whole trade. That whole $8, $10 move, whatever it is, I missed all of it by not being a breakout trader. I am not upset. I am not disappointed. I know my limitations and what I prefer or how I prefer to trade. And the breakout is not the way I prefer to do it. I get slapped regularly on breakouts. Okay. Let's see. Looks more of a continuation, PK. Exactly. Yep. Jennifer said, trading in the direction of the S&P is the golden rule. It is. It is. It literally should be plastered, on your walls. And you should have things like that around, whether they're stickies on your monitors, on your board. I have this massive 3-foot by 4-foot pushpin pegboard. It's not a cork board. It's better looking, nicer border. It's more like a carpet backing. And the biggest thing I have up there for me is just do it. Just do it. It's too easy to get into fear mode and you're not trading anything. Just do it. Man, if you like it and you're ready to pull the trigger, pull the damn trigger. Okay? So Goldman Sachs, great move. Really wasn't the setup I was looking for. Right? So I would pass on this one because I didn't get the setup I want. Right? So we'll go back to a 5-minute chart. And let's go and look. I actually have these. I have check marks next to them. So AMD is the next one, right? 173.18. So now we've moved fib line to fib line here, right? So, see here too. Could I trade the bearish side? You could, right? If that's what you chose. But remember, the S&P is up today. So do I want bearish? I don't. I only want bullish. Okay. So we got 173.18 and we're looking at AMD. AMD, we're on a 5-minute candle. strong one 5-minute candle up. We had a pullback in here and a bounce. I really want to go look at ones and see how we did with ones, 1-minute candles. Right, so on the one, we just broke right out, nothing in there at all. So on this green candle down here that from 9:33, again, I'm back in position number one in the chair. I'm all the way back here. Right? I'm not ready to do anything. As we break out on candle two, or the next candle, I should say, I am in position number two in the chair. I go from here to here. All right, what am I waiting for? The pullback. I didn't get it. Back here. All right, now I come and look over here, and this is 9:47 this morning. I prefer my trades to be before 10:30 for the entry. Doesn't mean it's the only time I'll take them, but that's what I prefer. Well, 9:40 something in the morning falls in that parameter, right? So now I'm going to look at a couple different things. We closed on this candle at 173.35 versus 173.18. So it's at 20 cents minus 17-cent difference on where it closed, but the low stretched down to 173.26, 8 cents from here. We had a small gap down and a bounce, and I'm waiting for us to be $1 off of that 173.18. So I'm probably going to be at 174.25 becomes my entry. Okay, so 174.25. So on this candle right here, we had a high of 174.36. So that candle, I'm in. I'm in on that candle. Vacillate. Now I'm going to move this back to a 5. Just make it easy to see. Right? What happened? We're talking about, say 174, just makes it easy math. You're in at 174 right now. We're at 177. So we've done well. How you handle, I'm not going to talk about the pullbacks in here. I'm really looking for the setup right now. Right? I have a couple of different exits to take. You could take a break, a close below the 8 moving average. You could take 2 closes in a row below the 8 moving average. You could be a wick below. I don't do that. I think that's too high risk, too fast paced for that. So, a close below, maybe. If I'm up, I'm not getting out because we closed below. I'll watch the next candle, which popped and pop. We pull back, close below, nice move. Close below, nice move. So we're getting nice bounces off of that moving average. You could set trailing stops up on it. You could set up a hard target and stop in there, make adjustments to the hard stop. You were at 100, now you're at 102. Then you move the stop up to 106, and you can make those adjustments to your stop. There's no charge for it, to make those. It's just make the change. Broker wants you to have an exit in there when possible. So AMD was the perfect setup today. The absolute perfect setup, right? And I am very much a visual trader. What does that mean? I am not just looking at the dollar amount, because I could have looked at this and go, wow, this is pretty close to the fib line. I like it. And then I go and check and it's $5 away. Yeah, I don't care if visually it looked good. It's too far away. Or it could have looked really far away and it was very close. I'm not going to take it either, right? Visually, I need the stock to get near the support line in the bounce. So Scott said, I've got a balloon strangle going on AMD right now. Good for you, Scott. How's it going? How's that trade doing? So let me ask, 1 for yes, 2 for no. Is this helpful so far? I'm really trying to dig in. We're going to look at 4 stocks. And this is my life. This is what I do. So very few ones in there. I don't know if some of you are just ashamed to put a 2. It's okay. Listen, Elise has only been trained to delete you if you put more than one time you put a 2. So don't worry, put a 2 in there. Okay, good. All right. So AMD, I like the setup. Like it a lot. I think it was well worth our time. The depot of homes. What happened? We closed just below. We gapped up, right? So on the open, it's kind of like, ooh, I'm right in position number one because we're right at that 364.19. So let's go look for the depot. We'll go back to a 5. Here's the 364.19. There's the move up. We gapped right to it. We ran, we pulled back. Did we get a bounce anywhere? I don't know. It's a 5-minute candle. Let's go look at a 1. Scroll back, scroll back. Okay. So that first 1-minute candle, 1, 2, 3, 4, 5. That's the first 5-minute candle, comes up to here. Right? So we got to pull back here. Distance-wise, looks like it might be big, but let's see what we closed at there. You closed at 364.51. So 20 to 50 is 30 cents. We're talking a 30-cent difference between where we closed and our fib line. Right? Did we have a wick that went down further? I don't think so. I think the close was the low. Yeah, that's the low, 51. Okay. So the next candle opened up at 364.67. I'm going to look at this, and right about 364.25 would be the entry. So let's see. Yeah, so right in there. Pulled back, bounced off of there, right? So that red candle, this one here, was the pullback. This was the bounce, right? Is it as pretty as the last one was on AMD? It's not. It's not. But how do you handle that then? Well, maybe we take less contracts. Maybe we only take 1 contract or 4 contracts, whatever your number is, less. Less is more. What does that mean? Less contracts means you get to trade more if it goes against you. Okay? So trying to trade everything all at once, your whole portfolio may not be the best decision. Scott said one of the legs is 50 cents away from being in the money. Okay. All right. Yep, PK, to me, it's a go. Right? To me, this was a go. And this is me. You may look at that and go, yeah, I want to see a closer in there, closer pullback. You can make all that decision. Not a question. You can. Right? You just want to build your setup out that way. Last one is NVIDIA. Yes, NVIDIA. 724.46. Let's go over to NVIDIA. $724.46. Okay. Pop up. Now we did get a wick that pulled back, so that might have been a bounce off in there. We pulled back here, we came here, we opened up, we moved up, we retested, we bounced. Just on the 5-minute, it's telling me that we took the trade somewhere. We're going to go to a 1. We're going to back it up, and we're going to analyze it like 7-year-olds. All right, so what am I doing here? Why am I... All right, let's go back and find one too far back. All right, so here's the dot line right in there. So we gapped up and we pulled back on the first minute. Second candle, we moved up. Third candle, we broke out and just exploded from there. Good pullback. And there we broke out, pulled back. Look, on this candle, we closed 724.69. 23 cents above this line. Here. Okay. And then what? Now that's at 9:54 this morning. Easy. Perfect timing, right? We opened up here. Well, we pulled back then. Right? We pushed up, we retested, we bounced. somewhere in there gave every single trader an opportunity. That line is 724.46, Brenda, and that line aligns with this negative 618 on the fibs. Yeah, you're right, PK. It's beautiful. I mean, that's just a great chart on NVIDIA. 473 to 724 right now. Brenda, okay, good, Brenda. I was going to ask you if that made sense. All right. Okay. So then did it get up at least $1 above that level off of here? So we're looking at 724 and a half, so 725 and a quarter. That high there was 727, so we're in. We took some heat, we bounced. So we're past 10 o'clock right now. We go back to 5s just to make it easier to see. There's our 10 o'clock candle. We had a test here and here, both bounces as opportunities. So now you're talking about being in at 725 and a half, and we ran up to 745. It ran up about 20 points on the day, right? And if you use the micro day trade, the micro day trading strategy that I use, these candles would have taken me out. I wouldn't have gotten to take advantage of any of that. Or I wouldn't have taken advantage of this either. All right, Scott said I have a balloon strangle on NVIDIA as well, and that one is making money right now. Last week was 78% ROR on NVIDIA. Good job. Nice job, Scott. And I know Ryan is instrumental in those. We taught them to y'all in the Inner Circle training that we did, the full day, I think last year, which I'm pretty sure they are. All those videos are still in the Inner Circle members area. Brenda said, I think I would have waited for a break of the first 5-minute candle. Yeah, and that's okay, Brenda. See, that's the greatest part about it, right? Is you get to choose what's the right setup for you. I've got a little more experience, maybe a little more aggressive. And again, we're all talking non-funded, right? So that's just the way I would take my non-funded setup. My trade would be that way, right? It's the way I trade it all the time. It's the way I call it, like in power option plays all the time. Same exact setup. Brenda said, so on the 13th candle, I would have entered. 13th 5-minute candle, Brenda? Up here? Yeah, that's a little far away from me. And here's why. And again, Brenda, you're gonna do whatever works and suits you best, okay? If I get in here on this candle, my stop is gonna be somewhere down in here. If I get in, I don't know which candle it was. 1, 2, 3, 4, 6. If I get in here, my stop is still down here. So I get in at 726. I don't know. Versus getting in at 732. I can't justify it because my stop has to be in the same exact spot. Doesn't mean you're wrong. You have to take on that risk for that trade. As long as you're good with that, then I'm good with that. Scott said, Roman inspired me to try it out since he's been doing it. You mean the balloon strangles? Scott? Yep, okay. Yeah, Roman's a good trader. He's got a lot of different tools in his tool belt that he could trade. So, I mean, there you have it. For me, the setup is pretty simple. Move above my drawing tool, please. Move above my fib line, come back and retest it. Bounce, entry taken, stop is set down here. Target is going to be set up here. Somewhere up there. All right, general, just showing targets up above. All right. And I never would have made it there. I probably would have been out somewhere over between these two candles. Between one of these two is when I would have been taken out of the trade. Couple of big green candles, a big red one. I'm going into position number 1 in the chair right there. We dojied out the next red candle. I'm probably gone. Right then and there. Good, Brendan. It's okay. Now I have a new way of looking at the entry trade. Thanks, Rob. You are quite welcome. And that's why, look, that's why we do this. right? It is to really dig in to some methods, some techniques that you can use, take advantage of in the market now. Right? We don't talk about what worked 10 years ago, now. All right, let's see. Tim said, then follow the other rules to find the right option price with volume, open interest, etc. Yes. So now, Tim, we've got NVIDIA here, right? Let's just do that. Let's wrap up with that on NVIDIA. It's a great point. It really ties it full circle. Right. Helen said it looks the same as Goldman Sachs, the bounce retest off the moving average. You got it. So here is it's a square. Okay. Here's NVIDIA. This is my down and dirty. I look for Delta first. I can care about anything else. Right there. All right. I go to open interest. Every one of them good. I'm going to look at volume just to see where it, right now, the big volume for what I'm looking at is at almost 18,800 for the 720s. So I'm going to buy the option. And right now, the mid price is 24.28. The theoretical value is 2013. So if I want to trade this, I'm paying about $4 over what it theoretically is valued at. Not surprised with the way it's run lately. The market maker needs to take advantage of the situation when he can and charge more money. Your choice is don't trade or go sell something that's overvalued. Go into the naked put side and sell. I don't normally do naked puts on a $700 stock, but that would be the other choice. It's something that you could sell. All right. My bid-ask spread, 2405 by 2450. Oh, man, that's nothing. 45 cents, easy peasy. Piece of cake. Okay? That's exactly the process of what we go through. Now, if you were doing this, Tim, as an example, if we did this on Goldman Sachs. Okay, so Delta. OI. Plenty of OI. Okay. And now we're looking at, I'm going to go with the 66 Delta. It should be trading at 762. It's trading at 730, so less than the fair value is. It's actually trading at 720. Less than the fair value, right? Fair value is 762. It's trading at 720. 720 by 740 is the bid-ask spread. Perfect. I have 20 cents of bid-ask spread in there to contend with, which is nothing in the grand scheme of things. I'll take it. I'll take it. Right? Now, everything worked. But what if we have Costco? All right, plenty of open interest. Let's do it this way. What do we have? CMG, Chipotle Mexican Grill. Let's go find the delta range we're looking for. Actually, you got to look at more strikes. Because the last one I could see had an 81 delta. 84. Look at open interest. I got one only. The only one I can consider is the 2590s. They're trading at 37.20 by 41.70. $4.50 bid-ask spread. Enough open interest. Now the mid price is 39.5. The fair value is 40.85. So we're fairly priced. It's not like it's overpriced. You have to look at that and say, am I willing to spend that much money on the option? I'm not saying it's good or bad. It is. It is. It is the numbers that we have to work with. That's it. Those are the numbers to contend with. Right? You just have to pick, will it work for you or not? And then you can always take it to the next extreme and go to booking. I see enough open interest, 345, 71 delta, 86.20, should be trading at 77.30, and we have almost $10 bid ask spread. Ouch. Woo, I'm gonna stay back from that one, baby. I'm not saying you should or shouldn't, but you need to know the game you're getting into. Right? Don't ever go in the entrance unless you know the exit. Wait, I just paid how much for that option? I had to spend $8,000 to get an A contract? Yeah. How many did you buy? 10. Make sure you fully understand what it is you're looking at. Tim, did that help to kind of break it down that way? PK said I have a mental barrier that I will only get the mid fill because the price has started to fall and then I would not want it. Yeah, it is definitely something to overcome. I mean, Brendan, we can look at SPY, but we don't have this issue with SPY at all. There's every option you look at has enough open interest. SPY is not an issue at all. We're going to look at today's option. We're on 0-day expiration. Always. You're bullish. We're going to look at a 65 to 85 delta. We got one only. We got 75 delta for today. Right here. Would I trade the 88 versus the 85? Maybe. It's not bad. 219 I'm going to pay for it. It's not bad at all. Really good open interest on both. Really good. I mean, volume on both. The open interest on both. Really good. 75 versus 88. Okay. 219 is the mid price. It should be trading at 209. So it's 10 cents over value. See, Brendan, that's what I meant. There's not a lot. There's not a lot there. Jennifer said, I understand about the mid fill when it is going down and missing getting out. Yes, and that's exactly it. Right? When you go after that mid price, there's a chance you don't get filled. You're gonna have market makers that just like to be the bad guy. Ha! I ain't giving you one damn penny off the price. My dad was a good salesman. Really good salesman. And I watched him work. Just the things he would say to customers, I would be embarrassed to use that tone or those conversations with his customers. That was a relationship he had built with them, right? But he was not the guy to take any money off. In the height of the best boat sales ever on Long Island, I was selling boats on the side, just doing boat shows only. And then I'd go to the showroom after the boat show, meet people there to close them that didn't buy while we were at the event. And the owner of the facility would, I mean, I won't tell you exactly the words he used and the things that he did, but if you were selling $100,000 boat and the person asked you for a free porta potty, which at the time cost us like $70, if you gave him that porta potty, he would take it out of your pay. To sell a $100,000 boat, he wouldn't give him $70. All right. And then literally he would be throwing marbles at you for talking to them about it if he heard it. All of a sudden you're sitting having a conversation, you go, because you just got hit in the eye with a marble. Right? Yeah, a little hard marble. Right? Crazy dude. Right? I think you got to find what works for you and make the decision of yay or nay. Is this a good one or a bad one? For me, my risk profile, my style, booking is not for everybody. Chipotle Mexican Grill, Costco are not for everybody. Right? The options can be too expensive for some. NVIDIA is not for everybody. NVIDIA is much better on a Friday when it's lower priced up. Cool. All right, was this helpful? Give me a 1 for yes, a 2 for no. Excellent. Cool. Well, I appreciate it. All right, everyone, we're about there. Sorry we didn't get to any candidates today, but I really felt, no kidding, you know, and I was going to do all this fancy stuff here, right? We're going to, I was going to do this, was going to be the GO, right? The GOAT, right? Greatest of all time, right? Greatest of all time. And I was going to do GOATs, right? Greatest of all time trading setup, right? I was going to make a graphic for it, all that fun stuff. Just ran out of time today. But this pattern that we just went through, guys, you don't need to get fancy. You really don't. You just need to dig in. Find one that works for you and follow the rules. All right. So with that, everybody, we'll leave the room open a few minutes. Lisa dropped some links in early on that you can go ahead and register for or go look over at Trading Like a Boss. So with that, have a great rest of your day. God bless. And I will see you all at our next update. Take care, everyone. See you soon. Bye.